Welcome back to Delphi Psychotherapy Billing Software. This video is a discussion of what happens when we have made payments against an account and we made those payments against an advance and we would like to use those payments. So for example, in this case, if we take a peek at Hank Aaron's payment screen, we can see that we've received $90 in credits, in this case from the insurance carriers, and we'll clarify that a little bit here in a second. And we have a $10 balance remaining on each of the sessions. Also, we have an advance of $60, which has been credited to this account and not yet committed to the sessions in question. Another way of looking at this is from the financial history screen, is that on the session on the 1st, we got our Blue Cross, January Blue Cross payment of $70 and $20. We got the same thing on the session on the 9th and the session on the 27th. And the client paid us $20, which we did not commit against the session yet. And the client paid us $40, which we would probably have been tempted to pay against this session and that session. The reason we paid the money to the advance initially is because we didn't really know what the coverage actually was. The client can be quite confident, and the insurance company can tell you that their copay, or they believe their copay, is $20. But you often find out that this number is completely wrong, and that happens for all kinds of reasons outside of your control. So the issue at this point is we still have these 3 sessions with $10 balances, and we have $60 sitting in the advance that we would like to now use to pay these sessions off. So I'll show you how to do that in this video. First, we go to the payment screen. Now you can give it any date. We're going to just say that we're going to apply this money today. This is on behalf of client. These advances were client advances. Almost always when you receive a payment from an insurance company, you're applying it against the individual session. The description in this case, I'm going to say apply advance. Now the tricky part, and the part that gets a lot of people confused, is the amount of this payment. Well, this is a little leap of logic, and you might have to watch this video a couple of times before this sinks in. But what we're doing is we're borrowing from the advance to pay off the sessions. Another way of saying this is we're borrowing from Peter to pay Paul. And the amount of the payment, the fact of the matter is that we did not receive any money today. We received money in the past that has already been paid against sessions, and the client payments were made against the advance. But in the process of applying an advance, we simply have not received any money. We're simply taking bricks out of one wheelbarrow and placing those bricks against into another wheelbarrow. Or in this case, we're going to take $30 from the advance to pay off these 3 sessions. So the amount of the payment, and again, we're not making a payment. We're applying an advance, and you'll see this little button up here in the upper right. So again, the date, on behalf of client in most cases. Detailed description is that we're going to apply advance. This is simply taking money from one location, paying it elsewhere, and the amount is $0. Now I click on the button that says apply advance. And here we have a little lecture, which is basically everything I'm telling you right now. Apply from advance means that you're going to move a credit balance from an advance or session, and we'll get into that a little later on, but right now from an advance, and apply that amount to another session or sessions. Since you have not received any additional money in the form of a payment, you will not enter an amount, which is the reason that we entered $0 on the previous screen. This is similar to the analogy of borrowing from Peter to pay Paul. And we tell you how to do it, but if you just watch the video, we'll show you. So, the first step in applying the advance is that we need to take the money that we would like to use from the advance. We do that by double-clicking on the advance. And in this case, we want to, remember we said borrow from Peter? We want to take minus 30. That is a negative with a minus in front of it. Minus $30 from the advance. If we click apply this payment. Now the trick is, look up here. We now have $30 to do with as we please. And in this case, we're going to use 10 of it to pay the first session. So I will double click on January 1 and apply 10. This is a positive number. If I click apply this payment, That session's paid off. We still have $20 that we took from the advance. I'm going to double click on the 9th and pay $10 here. Apply this payment. And I'm going to use the remaining $10 to pay the session on the 27th. And apply. And now I am now done with this payment. Now let's take a peek back at the payment screen. This is a beautiful scenario. We have each of the charges are of $100, now have a complete credit of $100 against that. The balance on each session is now 0, and the patient balance is now 0 for each of those 3 sessions. These sessions are completely paid off. Now, earlier, we had made a total of $60 in payments against the advance, which we did by applying it and holding that money in reserve. And in the step I just showed you, we took $30 from the advance. It used to be $60. We took $30 from the advance, and we used 10 of it to pay the first session, 10 to pay the second session, and 10 to pay the third session. Now at this point, we can refund the client $30, or more likely, we now know that the patient copay is not really $20 for each session. It's really $30. So we can just tell the client to not make a copay for the next 3 sessions is one alternative. We could refund this $30 to the client if the 27th was their last session. Or we can just sit on it and see if they come back in and use it as we please. The one issue though here is that the patient copayment for each session is currently set at $20. If I close this screen, go to patient information under insurance coverage, I now know the copay is really $10. And if I close this screen, each time that I record a session in the future, the patient copay comes up as 10, the correct amount. Remember, this was originally 20, which was actually an error because the client told us that they owed us $20 per session, or the insurance company could have even verified that and found out that it was wrong. So I'm going to cancel that session. One last way to look at this is through the financial history. Here we have the session on the 1st with the January Blue Cross payment of $70 with a $20 write-off, and then we got the last $10, a patient payment, by taking it from the advance. Here we go. Down here on the 27th, we borrowed $30 from the advance, and we used 10 to pay this session, we used 10 to pay this session, and we used 10 to pay that session. And now this person's account has a $30 credit on it. Anytime that there's a credit on an account, that credit belongs in the advance. One other quick thing that's a little interesting about this screen is that if you look at the date of the advance, the date is actually completely irrelevant. We just simply put it down there, and if you open up the program a week from today, which might be January or February 4th, the advance is going to carry a date of the date, the current date. For example, February 4th, if it was a week or 2 out. The reason for this is that anytime that you open the payment screen, we want you to see that you've got $30 in reserve to deal with to use to pay off previous sessions, should that be the case. If I close this screen, and let's say I record a session on today, let's say I record another session today, and I go to the payment screen, I could take $10 from the advance to pay this, but I probably wouldn't do that. I would suggest that you wait to see what the insurance does on this session, and let's pretend the insurance pays a total of $70 with no write-off. We could take the whole $30 from the advance and pay $30 against this session. So there's a brief discussion of the advance. The advance is really a critical concept, and the basic idea is that anytime that you receive money from a client and you are not crystal clear where that money goes, instead of committing it to a session, you pay that money against an advance. We're going to show you a couple of other tricks and techniques dealing with advances in the next video.